All right. Welcome back. Welcome back to Think and Grow Wealth. Hanging out here with Richard Thornton. And my name is John Robert Quinn. I'm the guy who builds talk shows coast to coast. And I want to get a little bit of information. Who are you? What do you do? Tell me about yourself. Who are you?
Yeah, well, I'm Richard Thornton. I'm a note investor. I invest in mortgage notes nationwide.
Nationwide.
And they're usually smaller homes. They provide good yields. I only invest in seasoned notes, which means that they're notes where the borrowers have been paying 2 or 3 years. You've got a good payment history, and you can usually get a nice solid 8% yield or something like that for either a 5 to 25-year term on one of those investments.
And why are you so passionate about this?
It's a win-win situation. A lot of these people who are getting notes or these mortgages couldn't get a mortgage otherwise. And that's not because they have bad credit or anything. They usually are buying houses that are smaller houses, meaning 2 or 3 bedrooms, which outside of Cincinnati or maybe Canton, Ohio, or someplace like that, is a $50,000 house. You put a $40,000 mortgage on it, and most banks don't want to make a mortgage that small.
No, they don't.
So even though they've got good enough credit, banks don't want to lend on that. So I'm actually coming up with a secondary market or creating a secondary market for those sellers.
What about people in California? I mean, is there options there for?
So you could do this when we came out of the recession in California, and you could still buy seller carryback notes. Most of the notes you're going to get in California, though, are going to be larger because homes are more expensive. Larger meaning $500,000 and $600,000 and $700,000, and they're going to have much lower rates. Because also you can't get the margins in California. So most of these are purchased throughout the Midwest and maybe the Southwest.
Now, what type of people are you looking for? Are you looking to bring investors on? Or are you looking to find people that need mortgages? I mean, what kind of clients are you looking for?
It's not people that need mortgages. Most of the clients I'm looking for are investors who, say, have a couple $100,000 to invest. They usually do it through a self-directed IRA.
Very familiar.
Yes, the advantage of that is that you get a tax-free return, and 8% in today's market, tax-free, is pretty good return. Stock market only returns 7 to 8% taxable on the long term. So it's a lot of people who are building retirement accounts. It's also a lot of people who would like to participate in investing in real estate, but don't quite know how to get started and maybe don't have $200,000. Most of these mortgages are purchased for $20,000 to $50,000. They're nice bite-sized investments and are very good for a portfolio because they provide consistent, secure income.
A lot of people are looking for short-term investments. Is this more of a short-term or a long-term vehicle?
This tends to be a longer term, although I can I can make them as low as, say, a 5-year, maybe even a 3-year. But it's hard to do these on a 6-month or 1 year. Also, you got to remember that you're not going to get that kind of yield on a lot shorter term investment. So I usually just say that 5 years is the minimum.
So if somebody has $50,000 to bring to the table, is that what you're looking for?
Yeah, for $50,000, you could usually buy, say, 1 or 2 notes. And yes, exactly. That's exactly what you'd want to be. Quite often I work with people who are realtors who will give me just one of their commission checks every 6 months and say, look, invest this for me. Or I'm working right now with a CPA who manages small pension funds, defined benefit funds, for a number of small business owners, and he puts 1 note every 4 to 6 months into one of those plans. Or doctors. I've got a group of doctors who will typically pool their funds, and they buy 3 or 4 notes every 6 months.
That's actually really, really smart. When I'm thinking about all the opportunities here, and I work with a ton of real estate investors. Some of these guys are getting 50, 100, 150, 200, sometimes $400,000 checks for moving these homes, flipping these homes. They'll buy a home for $1 million, million and a quarter, and then they'll tear it almost down and they'll rebuild it 2 or 3 times the square footage, and then they in a year's time they've made $1 million on this property. And this is a really good avenue for them to turn around and re-leverage that money in other areas where they're not having to sit there and actually manage that fund. It's really smart.
Yeah, these make great passive investments. And I think when we came out of the recession, a lot of people were trying to sell what's called non-performing loans, which is where the borrower defaulted, they've somehow repositioned the loan or not, and they're saying, look, you can turn it into a performing loan by taking back the property or things like that. There are those loans that are still out there, but they're much higher risk. So the segment of the market that I'm working with tends to be somebody who wants a more secure, reliable, consistent income from their return.
Now, are they able to take their returns and turn around and reinvest those returns into other notes?
Yes, you can buy other notes. And one of the nice things also about these investments is a lot of times if you invest in, say, a stock, you'll put $10,000 in or whatever. And hopefully, if the stock has done well, when you sell the stock, you'll get your $10,000 back and some appreciation, and or you will have gotten dividends along the time during the investment period. That's the same here, except that you're being paid a little bit of your principal on an ongoing basis. So let's say it's a $10,000 investment. You might get $100 back the first month, $150 the second month of the principal. So if you look at the overall investment, when you're halfway through the investment period, your exposure is only 50% of what you invested, yet you're still getting the same return. And that's a very real mitigator for the risk of your investment.
It's actually, and it's, what I really like about it is, there's a lot of people that have $100, $200, $300, $400,000 just sitting in an IRA somewhere, sitting in something, an annuity or whatever. Pulling 25 or 30 or 40 or $50,000 out of that. Okay, me personally, I like the fact that, okay, I'm not throwing all of my eggs into one basket hoping for the best. It's kind of being smart about it. Wait till you see that you've got a return. Wait till you see that it actually is working, and then you can go in with more money if you decide to. I like that.
Yeah, that's very true. And a lot of people like the fact that these are a good alternative investment, meaning that you wouldn't want to make 100% of your portfolio mortgage notes. It's good to make, say, 20 or 30% of your portfolio have that consistent income. And surprisingly enough, a lot of people, when they ask me about these, they say, well, when am I going to start earning my income? And you say, well, the first month, just like you make a mortgage payment, it's right out of the box. You're getting your money. So it's not something you have to wait to see for a long time.
That's wonderful. I like this concept. I really, really like this concept. How do people learn more?
Well, they can call me. They can go to Richard Thornton on Facebook and find me. The name of my company is American Note Capital.
Okay.
I can be reached at 510-918-9001. I'm also on LinkedIn. You can pull me up on LinkedIn and get a lot of more information. And you can Google American Note Capital. And I have a lot of FAQs. I've got several videos there. I have a YouTube channel that has a short series of videos where you can learn more about notes.
What's that phone number one more time?
The phone number is 510-918-9001.
And your website?
Is www.amnotecap.com.
amnotecap.com. Richard, absolutely phenomenal. This is great stuff. I've actually got a couple of people personally that I want to bring this to. He told me, it was the day before yesterday, he told me, yeah, if you've got other ways for me to make money, let me know.
Great.
There you have it. Hey, thank you again so much. We're going to go to a break. We're going to come back and learn more. We'll be right back.